I had a thought, and what I wondered on this issue of the premium gouging from the major retailers. Well, it's pretty obvious that it was the drop in price. Pardon that road noise. It's pretty obvious that it was the drop in price that created the demand, right? So the demand and the sellout is not really the story. The story was the drop in price, and the other part of the story is the retailers not being willing to sell what they have at that price and finding it difficult to source new silver at that price. And I wondered if what we're seeing is a little bit of a revolution, right? It's kind of like the paper markets, who often dictate the price of physical, got carried away or perhaps over manipulated, but no, I think it was more just selling, margin selling. But the paper markets got carried away, and the physical markets said, oh no you don't, because there's only so much. And those of us that have the most of it, and that would be the bullion houses, right? And well, I'm sure there are some billionaires that have quite a bit. But when you look at who would have the most, well, a company like APMEX, right? Charging some of the highest premiums out there, and other companies as well. And I think they said, you know what, we're not doing it. We're not releasing our silver at that price. And furthermore, we're doubling down and betting that you can't make that price happen in the long run, that it can't be mined and distributed and melted and minted and coined and sold again, and then sold from a retailer with sales tax. The price that would be required given $12 silver would be so low that the people that are aware of the real costs involved in silver, like the retailers, said, we're calling your bluff. You've run things for a long time now, but you know what? You don't get to run things anymore. And what they didn't sell out, based on the high demand, they put away in the vault. And just because a bullion retailer says, that's on pre-order, or it's going to take us 10 days, well, they don't believe everything that you hear and see and read. Okay, I mean, they don't have to tell the truth about any of it. They're private companies. But I do believe that they were not willing to release their inventory at an artificially low price. And this is one reason that I think prices are going to come back up. I do think that we're going to see them come back up. I was worried there for a while that we might see them go lower, but this Mexican standoff between physical and spot makes me think that spot is going to come back up to meet the price that sellers are willing to sell for. But I also don't think, and I'm not recommending, that anybody go buy $25 Eagles or $20 Eagles. It just doesn't make sense. So, you buy your $13 Buffaloes and your whatever 10 times face Constitutional. Pick up those things that are really close to spot. Gosh, there's so much. It's so interesting right now. It is new times. These are historic. The next shoes to fall. Gosh, I completely forgot. Okay, if you're invested in bonds, which I was 100% in government bonds and CDs. And but I did dabble a little bit in some corporate bonds, stuff like Clorox, right? I mean, really smaller positions. But I'm finding that there are no buyers. So, the premium which had accrued on my Clorox bond is disappeared and turned into a discount when I tried to sell it. And this is Clorox, okay? I'm not talking about Continental Airlines or something. So, and then there was something else I was selling. I think it was anything from J.P. Morgan, or the big houses, right? They were not making fair bids on even their CDs, So something's up in the credit market. Sell. This is not financial advice. Sell all your corporate paper, junk bonds, and corporate bonds. Sell them now if you want to get out of that. The next thing I'm starting to do is I'm reducing my CD positions 50%, which, God, I had some good CDs too. But you know what? They carry a premium when you sell them. You know, once you take a long-term CD and the rates go down, it carries a premium like a bond and on the E-Trade platform. And the discount, the sales spread is not that big. So those are doing much better than bonds. But I think we're going to have some bank failures. I think we're going to have some corporation failures, and that's going to cause banks to take a hit. I think we're going to have some bank failures. And I've heard people saying that physical cash supply is drying up in some places. I had told you last week that I was buying $1,000 a week. I was taking $1,000 a week out of the ATM. And this week I stepped that up to $1,000 a day. And luckily I had that too. I had transferred some money from the brokerage. But I think the banks are going to be in tough times. And I'm not looking to have a whole bunch of CDs right now. I'll redeploy them, after we're through the crisis. But just in case we get some bank closures, and of course, there's FDIC, but people are telling me not to trust FDIC. And then there's a provision for bail-in, which means they'll take your money and give you bank stock in its place. And even if that probability is 5% or 10%, I don't want to risk money, retirement money at the banks right now. So I'm pulling it out, and it's going into the E-Trade nothing fund. It's in the earns nothing fund, which I could probably do better than that. But I remember money market funds started to fail the last time around as well. So maybe the nothing fund is a good place to be. And of course, that money is held, fiduciarily for their clients. I really think no matter what happens, I think you get that money back. Might not be a bad idea, huh? Keep money at a brokerage instead of at a bank. I'm not talking about a Lehman Brothers, somewhere like that. I'm talking about, something a little more downscale, like an E-Trade or not Robinhood. Jesus, you guys and your Robinhood. Come on, get a real broker for God's sakes. And not that E-Trade is any fancy broker, but they got everything you need over on E-Trade. You can do anything you want. You can do it all for near nothing. And they do have advisors if you do want one. So anyway, and they'll pay you to transfer your money there too. They write you a check. Well, they'll put it in your 401k, or your IRA, but they'll write you a check if you send your money over there. Anyway, so that's thing number 2 is bonds.